But I can't stress this enough is when you're starting off and you need to know where to improve and where to focus on, you have to know where your weaknesses are. And if you're not tracking your basic metrics, how do you know where your weaknesses are? How do you know how you're doing overall? If you're not tracking your renovation budgets and how close you are to them, if you're not tracking your occupancy, how do you know if you're successful? How do you know if your leasing team is efficient if you don't know how many days on average it takes them to get a security deposit on a property?
Welcome to the Real Freedom Show, where we inspire you to pursue your passion to gain time and financial freedom through opportunities in real estate. I'm your host, Mike Swenson. Let's get some real freedom together. Hello, everybody. Welcome to another episode of Real Freedom, Real Estate Leverage Freedom, where we talk about different ways to build time and financial freedom inside of real estate. I'm your host, Mike Swenson. If you want to get started on your real estate journey, check out our website, freedomthroughrealestate.com. That's freedomthroughrealestate.com. We've got a lot of great information on there, lots of great interviews, lots of great stories to share to inspire you to do more inside of the real estate space. For a lot of people I know, how do we go from nothing into something in real estate? I don't know what to do. I don't know where to go. I don't know if I have enough money. Don't know how to manage properties, find properties, you name it. And so today's guest is Lindsay Davis. Lindsay is the CEO of Spartan Invest. They handle turnkey rental properties primarily in the Southeast region, and they take care of everything from acquisition to management, helping you to find turnkey opportunities inside of real estate. And we're so excited. She's got $55 million in deals and over 2,000 properties under management, helping investors find great properties and own great properties. So Lindsay, we're so excited to have you on the show.
Yeah, Mike, thank you so much for having me. Excited to be here.
Well, why don't you just share a little bit about your background, and we'll take it from there.
So Spartan Invest, kind of what you just discussed, is what we do in our business model is we're a full service turnkey company. So what we're doing is our headquarters are in Birmingham, Alabama. We're all over Alabama, in Tennessee, and in Georgia as well. And we'll find properties, do the full scale renovations to those properties. Then we resell them to investor clients. Now, a majority of our clients are in areas where it doesn't necessarily make sense to purchase rental properties, like Southern California, Hawaii, New York, those type areas where the numbers really just don't make sense. And then we also have a property management company that's in the same building, sister companies, Atlas Rental Property, that will manage the property for you after the fact. In 2020, we started new construction company called Corinth Construction, where we also do BTR, build to rent, and offer those to our clients as well. So really, our goal is to just be mailbox money for those investors that are wanting to get into the real estate space, wanting to diversify their portfolio or get some cash flow, what have you, but may not live in an area where it makes sense, or may not just want to spend the time, because property management is not great. It's not fun. That's what we're set up to do. We just want to be the mailbox money for our clients. We've been in business for about 15 years. We started in the turnkey space right at about in 2013, but we were doing the BRRRR method from 2009 to up until then, and just made the hard shift to rental properties when we kind of discovered that, hey, the cash flow from our own rental portfolio was helping keep the lights on. This is the value that we see, especially in our particular markets. And so made that hard shift. And the rest is history. Like you said, we've got over 2,000 doors under management, all single families in 3 states. And we average anywhere from about 250 to 275 sold doors a year.
So backing up a little bit, I'd love to hear, for you getting started into real estate, kind of what pushed you over the edge to be able to do that, versus other industries or whatever kind of your background is, and kind of some of the early days. And yeah, I'd love to hear. A lot of folks do tend to kind of go from the BRRRR route into the hold method over time. So I'd love to hear kind of about the early days and the start there.
Yeah. So, that's one of the ways that I paid for my way through college. Was my parents helped me when I moved from Georgia to the state of Alabama to go to the University of Alabama, roll tide. Sorry, had to. But when I moved to Tuscaloosa, we purchased a property where I lived and then rented out the other rooms. So I was also a tenant slash owner slash landlord, and that was not fun. It wasn't great having to demand rent from your roommates in college. Uh, but the income that I was getting from them, even when I was 19, 20 years old, that income that I was getting from them was helping to pay my rent, my utilities, et cetera, et cetera. I mean, of course, I still had to work through college, but seeing the benefit of that really made me interested in real estate from a very young age. I did go straight into corporate world, and I worked for Centos Corporation. That's where I met my business partner, who had family in a different city that was doing your BRRRR method. So that's really how I got introduced to real estate. On the flipping side was chasing after the foreclosures, but it was the time in the market is really what solidified our desire to shift more in the turnkey space. And when we were doing flips, we were staging and had the works. We were doing absolutely everything, all the high end stuff, but it was in 2010 and 11, and the properties just didn't move the way that they do now. Even it doesn't matter what kind of renovations you were doing, you were giving over, a arm and a leg in concessions, throwing everything just to get the properties moved. And so it was that kind of volatility what made rental properties just a lot more attractive. And that's why we decided to make that shift in 2013 to just providing rental properties. Now, we will sometimes, if a great deal comes across, that we will sometimes flip properties, but our bread and butter is strictly providing the rental properties to investors.
The nice thing about real estate is there's no cookie cutter that you have to follow. Oftentimes when I was working with investors and helping them buy properties, sometimes the deal kind of tells you what the best path is for it. Fix and flip or hold, whatever it might be. It might be the price point, it might be the neighborhood, it might be the work that needs to be done on it, but you can just listen to the property and hopefully it'll tell you kind of what that best strategic method might be.
Yeah, I think it depends on the area. It depends on what kind of rent you're able to generate. And that is how we determine what we're going to purchase. Since we're providing rental properties to investors, everything is based on what the cash flow is going to be and what that overall rate of return is going to generate. So when we're analyzing properties, it's, hey, what is the rent going to be? That's the first thing that we have to determine. That's going to determine the sales price. And that's not usually how you analyze deals. So if I'm analyzing deals in your A+ areas, the rent is not going to be high enough for that to make sense on an investment space. So yeah, absolutely. Every property is different. You let the property tell you what it needs to be done there.
And then you also mentioned, in terms of area, where you guys are located does make sense for having rental properties where your rents coming in can meet the mortgage. Because like you said, on the coasts, you just can't find that. And similar for me in Minneapolis, St. Paul, we worked with a lot of out-of-state investors that wanted the safe, stable Midwest as well, because it was a little better price point, a little bit better projected returns. And yet even for us here in Minneapolis, St. Paul, probably a little bit different than what's in Alabama. And two, talking about kind of landlord friendly versus tenant friendly laws, that's also really important too for people to consider when they're looking at different states to invest in.
Absolutely. It's got to be one of the top priorities when you're assessing different markets that you want to invest in, or you want to even look at. Landlord friendliness has got to be in your top 5, because it's essential, because the state of Alabama, for example, places a lot of importance and emphasis on the property owner's rights. And that's huge if in the event that you have a resident or a tenant that's in there and not paying their rent, you have got to be supported by a local and state government that is going to move swiftly to remove that resident. And that's not ever an ideal scenario. That's not the norm. Our eviction percentage for our property management company is extremely low. However, in the event that you do have that happen, you don't want to sit on a non-paying tenant for 12 months, which a lot of states do see, unfortunately. And that's just going to have such a negative impact on your overall investment. And you also want to look at other factors like growth. Are industries moving to that area? How diverse is their overall local economy? What is their job? What do their jobs look like? Is it diverse? Like we've got auto manufacturing, healthcare, retail, so what does that makeup look like? Are you going to have a plethora of well-paying jobs to sustain that rental market? And you also want to look at property taxes. And if you're having to pay 10, 15% in property taxes, I can't even really speak to where they are outside of our states. I know the state of Alabama has the second lowest property taxes of any other state in the country, and that's going to do nothing but positively impact your overall cash on cash return. And then, of course, you have to take into consideration affordability. Like you said, you just getting that the 1% is really hard to achieve right now, but you want to always get as close to it as humanly possible. And the affordability piece it just plays such a crucial role with that.
Now, you talked about primarily working with people out of state, right? So I'm looking to invest in something that's affordable, landlord friendly state. However, I live miles and miles away. I'd have to hop on an airplane or drive in a car for a really long time to come see you. So talk about that process of kind of, overcoming that fear, that uncertainty of putting a lot of money into an investment that's quite a ways away. And it's not like I can just drive down the street. My first rental property that we fixed and flipped was literally on my way home from my work to my house. And it was like one block off the way. So if I stopped by after work to go work on it, I could. If I stopped by work to go, drive and make sure everything's okay, I could. In this case, you can't with Turnkey. So talk about that, building that relationship with the investor so that they have that peace of mind being miles and miles away.
Yeah, and that's a huge thing to speak to. And I'm really glad that you brought that up, because when we first started Spartan, that was something that was our biggest hurdle. We knew the numbers, we knew the area, we knew the rents, we had the contractors, but it was getting people interested in Alabama, one, and then trusting us to purchase properties too. Trusting to know that we're going to do right. What does that look like? And so we do everything to make that as seamless as possible on the front end. Now, we have a lot of investors that still want to see the properties before they ever purchase, but the vast majority sight unseen. And what we're doing is we're going to these neighborhoods, we're picking out the properties, we're doing a full scale scope of work. We provide all of that to the clients. We have professional before photos taken, professional after photos, videos of it. Then we also have a home inspection of the property before we ever it. Also have a home inspection after we've done the renovation. Now, the investor can choose not to use that home inspection. It is through a third party, and the investor pays for it. But if they're like, hey, you know what, I'm going to go to another company and have them inspect it, please do so. Never buy a property, even if it's from us. Never buy a property without a home inspection. I would just not do that at all. So we're also doing sewer scopes, septic inspections. We have electrical inspections. All of that is provided to the client way before that they ever close. We're not going to ask a client to close prior to. And then we also have a closing coordinator. So let's say you come to SpartanInvest.com, you want to see all of our properties. We put you in touch with one of our wealth strategists. You guys look at all the properties, you determine, you say, okay, this is the one I want. I want this one on 123 Main Street. Well, once you've put that property under contract, then you go to our closing coordinator. If you've ever purchased a property, whether it be for you and your family to live in, you know that there's a million moving pieces there. Your lender is going to come back and ask you 40 times for different documents. So it's like, oh, wait, I know I need this, I need that. I tease, because I'm actually in the process of purchasing a Spartan home. I teased the lender. I was like, okay, so I'm really going to miss my firstborn son. Like this is, they asked for a lot. And so our closing coordinator is going to be there to help you through that entire process. They're going to help you make sure that you get your insurance set up. They're going to coordinate with the appraiser to make sure the appraiser has access. And they're going to coordinate with the closing attorney. So really, you're just getting the information from our team saying, hey, look, your lender is still missing this. You need to get some insurance. Here's some names you can call, really trying to make a white glove experience for those that are outside of our market or may not be able to just drive down and walk the property themselves. And then we even have clients that say, hey, I would love for you to walk me through the property. So we have our sales team go out there and walk them through the property. They want to see the street, because Google Street Views is not always reliable. So we'll drive down and show them the street view. all of those things that we can do to give additional comfort to the clients, because it is not, it doesn't go unknown. That is, man, I messed saying that up. It's not lost on us that there's a lot of trust needed when you're buying an asset sight unseen. I was trying to say that, but I think I messed that up a little bit. But you get what I'm saying. We take that very seriously.
Absolutely. And I, having worked with out of state clients myself, I walk through the property, take the videos, put them in a Google Drive folder. And when we do the inspection, like I'm holding the phone as the inspector's talking and they're walking through it. And it's, oh, can you go back and check this? Sometimes it's live. Sometimes I record it and share it with them and have questions. I've stood outside the front of the property holding my phone up and down the street too. Like, here's the neighbors' houses. Here's what they look like. So I totally get it. And, for a lot of people, that's a stretch to be able
It
to feel
is.
comfortable with that. And so you've got to do a lot to make them feel comfortable and trusted. And
Right.
that being said, it's still real estate and it's still dealing with people. And that, just because you check all the boxes doesn't mean that everything executes perfectly. You've got your spreadsheet calculated numbers and you've got your actual stuff, and life happens.
It
And that's
does.
why investing in real estate, there's a lot of pluses to it. It doesn't mean it's absolutely perfect, and challenges come up. And that's where your experience, your ability to problem solve, work through issues, right? You might have that tenant, as great as things look, that life happens and something comes up and you've got to put in a new tenant in there, even though your spreadsheet didn't say that you were supposed to put a new one in there at that
Right.
time, right? And so that happens. But that's investing in real estate. And for me, the pluses outweigh the minuses, investing in real estate versus investing in other asset classes. That's obviously why I love it and we talk about it. But yeah, stuff comes up.
It really does. And what you have to take into consideration is a lot of times investors will internalize it. And it's like, well, I would never not pay my mortgage. I would never not pay my rent. And well, not everyone is you, in that a lot of times our tenants are one life event away from a potential eviction. And you just have to take that into consideration. Now, I even my personal rental portfolios, I've got one property where the first tenant we moved in had to be immediately evicted. Now, if that was the only property that I rented, I could have walked away from real estate altogether and said, you know what, it doesn't work. This doesn't work for us. And my husband was very close, because that was one of the first ones that we purchased. He was very close. He was really upset. But as soon as that tenant vacated, I don't think they paid not one single month's rent. As soon as that tenant vacated, we got a new tenant in there, and that tenant has been in there for 10 years. It has been the same tenant and they've been phenomenal. So there's definitely pluses and minuses, but the rewards do outweigh the risks. But you're absolutely right in that there are risks, as there are with any investment. And I think a lot of times real estate gets compared to the stock market and other investment strategies. And all of them are still based on human performance, whether it's the company led, that the stocks that you own, or it's the tenant residing in your property. So you just kind of have to look at it that way, and that that there are going to be dips in the stock market. There are going to be bumps in real estate investing.
I just did record an episode probably about a month ago from the time that this gets released, talking about how in the stock market, right, some of the companies, you don't know what those employees, those C-level employees, are going to do. And so I highlighted
No.
kind of some of those famous or larger dips that happen. Doesn't mean that all stocks are bad. Doesn't mean,
Right.
investing in the stock market is bad. You're always going to diversify what you have. However, what I have talked to people about is, what people like about real estate is I kind of say there's a lot of little buckets. You've got your cash flow, you've got your tax advantages, you've got your mortgage payoff, you've got, updating and value add. There's all these little buckets, and not all of those buckets have to work in your favor all the time. You can have a bad month, or you can have a tenant that doesn't pay,
Mhm.
but you still consistently have that happen. But over time, in the long run, that tends to win. And what people do like about real estate is, even though they live states away, if they really wanted to, they could go drive past that house and see it and touch it and hold it and
Yes.
stand next to it. Versus a stock, you can't do that in a certain way. And so doesn't mean it's right or wrong. It's just for people that love real estate, they love that tangibility aspect of investing in something like that.
Yeah, absolutely. I mean, you want that, and like you said, the diversifying your portfolio is probably one of the biggest advantages, because you get all of the tiny buckets with a real estate property. But owning the actual asset and building your wealth through an asset that automatically appreciates, as history has told us and shown us that it will do, it is just hugely beneficial. But you're right, it's not for everyone. And that there are some investors that are like, you know what, I would prefer to look at the numbers on the screen and follow the stock market, et cetera, et cetera. Now you're going to have some success, but also you're missing out on that diversity with investing in real estate.
I've had some people that have invested in and bought a property, and they say, you know what? I just realized my stomach can't handle it. It's a little bit more than I want to take on. And while I love the idea of what real estate can do, it's not for me. And now you could find different opportunities. That's the other cool thing about real estate, right? There's so many different asset classes, so many different
Right.
areas, so many different ways to invest, right? If you don't like that uncertainty of what happens over time with a tenant, well, then maybe a BRRRR strategy or something like that might be a great opportunity. Who knows? But there's
Right.
so many different ways that you can win in real estate, and you get to choose which asset class or which strategy works best for you.
Yeah, absolutely. And I've again, one of the great things about investing in real estate.
Are you looking to get started or scale in real estate investing but don't know your next step? Are you overwhelmed thinking about finding deals, analyzing deals, doing due diligence, and managing properties on top of it? Go ahead and push the easy button and invest with us. Real estate investing is what we do full time. We've done dozens of deals with hundreds of doors. We have the knowledge and experience to handpick the best deals that most investors can't find. We've got large off-market deals all the time where you can hopefully find returns and economies of scale that you just can't find on your own. The best thing is it's 100% passive to you for less capital than you put down trying to acquire a property on your own. Don't let this year go by where you don't make the leap, add to your portfolio, or you just sit in analysis by paralysis. To find out more, visit freedomthroughrealestate.com and click on invest. You can book a call and learn more there. So get to scaling your portfolio now with us by your side. So talk a little bit about your markets. You've got a couple different states, couple different areas. How do you walk through helping somebody find a market that might be the right fit for them?
I think outside of the areas that we kind of already discussed, and you're looking at the taxes, landlord, et cetera, et cetera. You have some investors that are very particular about what they want to purchase. We have some investors that'll come to us and say, you know what, I want my ranch style brick, 3 it's got to be on half an acre. Like they want a property where I think they would feel comfortable moving in tomorrow. And then you have some investors that are like, I really don't care if it's bright pink and it's Barbie's house in the middle of nowhere, Alabama, as long as it's renting and cash flowing, and my return looks desirable, sign me up. And so I think it really varies based on the particular investor and what they're interested in. But for example, right now we have a lot of investors that are very interested in North Alabama. Huntsville has gotten a lot of attention about a lot of its growth. You've got the FBI, Facebook data centers, now the NASA headquarters, all of that's moving, that has been coming to North Alabama. It's one of the fastest growing cities in the country. It's definitely the most populated city now. It was only supposed to surpass Birmingham by 2030, and it did a couple of years ago. So it's just seen enormous amount of growth, and it's been best places to live. It's made all of these lists all across the country. So we've had a ton of investors want to get in and want to purchase in Huntsville and its surrounding areas like Decatur and Athens, which are great. You've got Toyota manufacturing right in the Athens area, still North Alabama. So there's a lot of opportunity there. But then those price points are a little bit higher. And it's with the growing, you've got a little bit more saturation that you're going to have to deal with in the coming years, a little bit more competition because new construction is pretty heavy in North Alabama. So we have some clients that are like, you know what, I want a little bit just more even kill, like a Birmingham. And that Birmingham, you've got that consistent growth, that consistent 2 to 3% appreciation year over year. And I'd prefer the steady. I'd prefer the slow but steady race with real estate, which I would always recommend. And so that's where we would push investors more to a Birmingham. And so I really think it depends on what the investor really wants and what their risk tolerance is. Also, new construction. And we have some clients that would they would prefer to pay a little bit more for a property, have it cash flow a little bit less, but be able to defer maintenance for about 5 to 7 years. And you're going to be able to do that with new construction. construction. And of course, you're going to see a little bit higher appreciation with new construction properties. So again, it kind of depends on the investor and what they're interested in.
Now, taking off kind of the specific to real estate hat and putting on an entrepreneur hat, talk about growing a company from more humble beginnings to now you guys are doing everything from soup to nuts, managing 2,000 plus properties and handling that. Would love to hear you kind of just talk about your journey as a CEO, building and growing a company and trying to kind of build that as you go.
Well, sometimes, honestly, I really can't believe that we've got that many properties under management. How we went from we had 10 employees, a few years ago in 2017, and now we have 77 employees. It's been phenomenal, but without sounding too cliche, the vast majority of our success goes to the getting the people in place where they need to. It's like, hey, you get the right people on the bus, and then you get them in the right seat on the bus. And so that's played a really big part in all of our success. I would honestly say the biggest struggle or maybe growth opportunity, if you are looking to start a business out there, is being pliable, being very flexible, being able to pivot very quickly. And that's something that when growing a turnkey company, when growing a property management company, what worked at 50 doors a year is not going to work at 100. And what works with 300 properties under management, it's not going to work at 600. It's not going to work at 900, and it's not going to work at 1,500. So you have to move and be more efficient with your processes as soon as possible. And I think a lot of times people get in well, I was successful doing this. This is the way we've always done it. And so we're just going to leave it that way. And we're going to keep trying to push and grow. And again, cliche, but the mistakes of not pivoting quick enough. I could sit here and talk to you for another 3 hours about all of the mistakes I've made and growing these companies and what we've had to change because I didn't act fast enough, because we didn't change quick enough, but still assessing the situation and realizing, hey, this is not where we need to be, and we need to pivot. The last thing I'll say is tracking all of your numbers. You can go a little too far down a rabbit hole of, analysis or paralysis by analysis. And I think sometimes we teeter a little bit too much on that. But I can't stress this enough, is when you're starting off and you need to know where to improve and where to focus on, you have to know where your weaknesses are. And if you're not tracking your basic metrics, how do you know where your weaknesses are? How do you know how you're doing overall? If you're not tracking your renovation budgets and how close you are to them, if you're not tracking your occupancy, how do you know if you're successful? How do you know if your leasing team is efficient if you don't know how many days on average it takes them to get a security deposit on a property? So you've got to track as much as you can. And every Friday, we have 2 company meetings where we go over every single KPI that the companies track. And we have to get up there, the directors, the managers get up to the front of the meeting, and they have to write the numbers on the board in front of the entire company. So if our occupancy is low, they have to write it in red. So it's an accountability, and also just knowing where you're struggling, knowing what you're doing good at, so you can keep doing that, and knowing where you need to focus your attention, because what gets measured gets managed. Is that the saying? Is that correct? I fully believe in that. And I think that plays a big part in how we've been able to scale.
Well said. It's tough to summarize decades of entrepreneurship in a single answer.
I really kind of rambled a little bit there. That's
that was
bad.
great.
I wasn't 100% sure. Sorry about that.
That was fantastic. I love it. So thank you so much, Lindsay, for coming on and sharing your journey and, Spartan Invest and how you've grown and changed. Certainly helping people get invested into real estate passively is awesome. For people that want to reach out to you, learn more about what you're doing, how can they do so?
Yeah, so if you want to know more, you want to learn about our markets or even see our available properties, check us out, SpartanInvest.com. I also have a podcast. It's On the House with Spartan Invest. And that podcast is primarily for those wanting to learn more about how we do things. So if you want to know what our eviction process looks like, there's a couple of episodes devoted to that. If you want to know how we analyze the properties, how our acquisitions team goes out and walks properties, assesses the rent, there's episodes on that. So it's really geared more from an education standpoint on our processes and procedures. And on our website, we also have our investor education guide that lists out basically everything that's on the podcast episodes if you feel like reading or if you get bored on an airplane. Then we have market reports. So we've got market reports for Huntsville, Birmingham, all of our major markets that we're in. And it even breaks it down into the zip codes. Like, these are the zip codes we buy in. These are the ones we don't. And here's why, if you really want to get into the nitty gritty on what we do and why we do it. And then, like I said, all of our available properties are online if you want to check them out. And if you have any questions, fill out the form and we'll set up a call to discuss any of your questions.
Wonderful. Well, thank you so much, Lindsay, for coming on and sharing. Best of luck as you guys continue to grow in the future.
Thank you so much, Mike, for having me on. I appreciate it.